Hey, so I got asked to talk about stocks, so I'm here to talk about stocks. Keep in mind, I'm not an expert, and if you want expert opinions, I would highly suggest going to talk to a financial advisor. A lot of times it's free, and I'm not going to be able to tell you anything that they can't. However, this is just some quick free resources to just dip your toes into the world of stocks, options, and all of those things. And yeah, so uh deuces. So, today I have a small request of like somebody's interested on basic stock market knowledge. So, I'm gonna go over it. So we're going to pop over to Google. Uh, don't worry about don't worry about all this. Um, that's just a lot of that stuff for my job. But we're going to go to Robinhood because that's what I use. I don't actively trade stocks, but when I do, I use Robinhood because it's pretty simple. And it's gonna want me to log in. It's gonna want me to log in. I'm going to enter my code, which you're not gonna be able to see. Boom. So I don't have that many stocks, but what I do have is GTE and WPG. But I'm not gonna talk about them today. So basics on how stocks work. So uh, let's use Tesla as an example. So Tesla. Stocks rise and fall. The basic thing that you want to know for stocks is you want to buy when they're low and sell when they're high. So if a stock dips down like this, for example, Tesla down $57, then that's a good time to buy in which case people do, and the stocks go back up. Stocks represent generally two things. They represent one, or three things. They represent one, how well the company behind the stock is doing. That's why Tesla is doing so well. They recently had a thing where they split their stocks because they were doing so well. Or not recently, it was a couple months ago, but recent in the long scheme of things. Two, the second thing that indicates what a stock is how many people are buying and selling it. For example, as a good method of showing this, GameStop. GameStop was flailing as a company, about to go under, and a bunch of people on Reddit heard that a certain big company for technology, Microsoft, was going to be buying it. So what they did is they in turn waited for it to hit a certain point and then bought in. I'm not sure what point that was, but they were like, hey, everybody in Wall Street's going to buy into this, so let's just buy in. So they did. And the stock price shot up. It was at roughly $20, $30, $40. And it shot up to nearly 400 in what, January 27th, so January 26th. It shot up to $145 by January 26th. And then by January 27th, start of day, it was at $370. So end of day, January 26th, start of day, January 27th. That is what, that's what, $200 difference, which is, since it's less than that, that's more than a 100% increase overnight. That's more than double the money. So that's the second thing that can change how prices vary. And then there are investors. However, how many investors, how much money they're putting into the company, can tell you a lot about how the stock is doing. So for example, a new investor comes along and throws money into a stock. It can shoot up like nobody's business, way more than expected. Or an investor drops out because they don't believe in it anymore. You can expect that stock to drop because people not only take investors into account when they're buying and trading, they take when investors drop out as a time that they need to sell because the stock's probably going to drop. One simple thing to know is for long term, the best thing to do is buy and hold. Don't sell at all. Unless your stock is just a company that's about to go bankrupt, don't sell because most stocks will come back from dropping. For example, let's look at some legacy stocks. Ford. So, Ford is at $10 over the 5-year mark. So, say you get really scared and sell Ford when it hits $5. Say you put your life savings into Ford when it was here, when it was $8. You're like, okay, you know what? I'm going to put my life savings into Ford. I'm going to hold on to it. And hopefully I can make some money by the end of time, by the end of how things work out. And then Ford drops to $5. You sell out. Oh no, I'm going to lose all my money in the COVID-19 pandemic in March. Well, as you can see, Ford is coming back. It was at 11:52 just the 22nd. Nothing's ever going to stay down. What goes down must come up. Some companies will plummet, but if you get a company with solid backing and a long time running, like Ford, there's very little chance of it actually crashing. It just really doesn't happen. For example, Twitter, 5 years. Twitter constantly rising. Over the last 5 years, it has had a plus 30% growth. Accounting for inflation, which is 2% per year, that's, I believe, still around 15% on top of that, which is really good. It's not like the best. You're not going to make a significant amount of money, but it may be enough to where you're going to have money. You're going to have more than you started with. And that's really what matters long term. Long term, you're not worried about significant growth. You're not worried about making money short term. You're worried about keeping your money, putting it into something that will continue growing. And then there's things you can do that make you money a lot more on the short term. For example, there are first cryptos. Extremely volatile, very likely to shift up and down. For example, Dogecoin. I bought some just as a joke a while back. I don't currently own any, but it was in January 1st, it was less than half a cent, or was it half a cent? It was less than half a cent on December 31st. January 2nd, it shot up to over a cent. So say if you put $1,000 into that, that's suddenly $2,000, more than $2,000. That's probably like $2,100 just for having your money into something. And look, I bought in for about I got scared and sold out early. I shouldn't have done that. But with something volatile like this, it's easy to give in like that. I would have made a lot more money if I just let my money sit in there. But then there's also Bitcoin, a whole bunch of other things. One thing that's constant with stocks is change. You're going to want to put your money for long term into things that you know are going to continuously raise. You're not going to want to put your money into something like Dogecoin in order to grow your money, because it's just not guaranteed. You want guaranteed growth. And overall, there is no 100% guarantee. There is no stock that you can guarantee is going to grow. You can look at stocks and see which is most likely to grow and what will probably profit you, but there is no way to know for sure unless you are from the future. The best way to just continually grow your money is to look at the numbers, look at what's happening. And then that takes us from stocks to what I like to call betting betting inside of stocks. So you can buy stocks and then you can trade options. So an option, at least on Robinhood, is somebody can take their stocks that they have and say that they will sell it to you at the price that it currently is. If it goes above a certain price, and you just get the stocks for that price, even though it was at this price. So, for example, this for a call. Say that I want Tesla to hit $835 by January 29th. Well then, I can pay somebody $53.60 in order to do that. However, if it doesn't do that, they get to keep my money. It does do that, then I get 100 shares of Tesla that I only paid $835 each for, even though it was maybe $900. Say it hits $900 by that time. That's winnings of, what is that? 65 times 100, $650 minus the 53 you put in. So about $600. So that's really great, right? But at the same time, they're volatile because you have to bet that it will be above a certain point. And it's pretty scary sometimes. That's why a lot of people don't like doing it. But a lot of people do because you can make a lot more money that way. It's just hard to actually convince yourself to do, you know? Because you've got to take a look at this and be like, hey, I want to bet that this will be above this price by this point in time. And it's just, for me, it's not something that I'm willing to do because I don't have that kind of money. And additionally, this is per stock. So instead of $53.60, this is $5,360. Because you're doing it for 100 stocks. So you can make a lot of money or you can lose a lot of money. It really just depends. And then there's puts, where you can say, I bet that it will be below this price by this amount, by this point in time. So I bet that Tesla will be below $815 by January 29th. Well, say it is. Say it's $750. That way it's still a $65 margin like we had with the other way around. So Tesla hits $650 or $750. What happens with a put is you have placed essentially a hold on that. You say, I want to buy it here, but I think it's going to drop. So what it is you have said that if it drops below here, I want to have bought and sold it for this price. So you make all the money that this would have gotten you. So so say you bought it at $750 and sold it at $815. That's 100 stocks each. That's $65. Minus the $17 per is I'm not sure. It's math, but you see where I'm going with it. You make about, and this is your break even. So you have to. Oh wait, no. They reformatted it. So this is all you pay. $17.03 for this price. So say you want Tesla to go to $815. Some of them are formatted different to where it's a certain price per stock. So it might be like 3 cents to buy the option, but it's 3 cents per stock that you're buying. Versus this is just $17.03. It's much more specific. With the bigger stocks, you're more likely to find those where it's just a given price in order to buy the option versus per stock. Or no. I was right. I'm just gonna cut this out. I'm stupid. But yeah, so that's basics of it. It's just how much does it cost, how much will it cost, and trying to determine to yourself what you think what that number is going to be, and then you can bet on it. And then there's cryptos where you can flip them, flop them, make all kinds of money. But with options and stocks, which stocks you can day trade, you can buy it when it's down here, sell it when it's up here. That's plus 2% you can do that every single day, but you can only do it if you have a certain amount of money in your account. Otherwise, you're, at least on Robinhood, limited to 3 day trades a week. Versus with cryptos, if you throw your money into crypto on Robinhood, you can buy and sell anytime you want. There's no day trading limit. You can buy it when it's here, sell it when it's here, buy it back when it's here, sell it when it's here, buy it when it's here. You can buy and sell as many times as you want with cryptos, at least on Robinhood. There are other sites for doing this, such as Webull, stock trading sites. There's Webull, there's Fidelity, there's TD Ameritrade, Charles Schwab, E-Trade, Interactive Brokers, Merrill Edge. There's a lot. And then for crypto trading sites, there's Binance, CEX, Coinbase is one of the biggest ones. It's really taken off. Bitfinex, ChainJelly, BitMEX, KuCoin. Best thing is to just take one and roll with it. And if you would like, I will give you my link in order to join Robinhood, and it'll give us both free stocks. All you have to do is click the link in the description, join Robinhood if you want to trade stocks. We'll both get a stock in the process, I believe. Yeah, we'll get a free stock, and if you link your bank account, we'll both get free stocks. So it's not bad. For example, my free stock that I got when I first started was, I got, where is it? I got WPG as one of my free stocks. When I first got it, it was, where is it? It was here. It was 70 cents. And then it shot up. I have no clue why it shot up, but now it's worth 15 bucks. So that just happens with stocks sometimes. People invest in it. The best thing to do is to buy it and forget it, at least in my opinion. That's what I have done. That's what I recommend doing. Buy and forget, because you'll make money on things. And then, yeah, if you have any questions, ask them down in the comment section and I can try and answer them. But keep in mind, you can lose a significant amount of money if you're trading options or even trading stocks. Never invest more than what you're willing to lose. I lost almost 500 bucks. I put 500 bucks in and was trading options and got it up to 1,300 bucks. Then I left my computer and then boom, COVID-19 hit. And the next day I checked, or no, 2 hours later I checked in and everything was gone. I had 30 bucks in the account, and eventually the options that were those 30 bucks expired, and they expired worthless. And I got no money back for my losses. Again, that's not guaranteed to happen, but it very well can. Thank you for listening. If you have enjoyed this or found it educational, I would appreciate a like on the video, and if it wouldn't be too much, subscribing to my YouTube channel. Thank you. Have a great time. Deuces.